Hey, this is Greg. Welcome to the channel. And there could be a major market correction coming. And in this video, we're going to talk about all the factors involved that could be creating the perfect storm. Okay, so this week was a wild week in the market. And today the Dow closed down almost 500 points. And everything was down today in a pretty major way as it was earlier in the week. And there's a number of factors that you need to be aware of as to why this is all happening. And that's what we're going to talk about in this video. So the biggest news this week was the continuing rise in inflation for the third consecutive month. So in the past couple of weeks, literally every measure of inflation has been surprising to the upside. CPI, core CPI, PCE, the PMI report. I mean, everything that came out basically is indicating that inflation is not only staying with us, but going higher. And then all of this bad news culminated with a very strong employment number where the economy created in March 303,000 new jobs. In addition, the unemployment rate went from 3.9% down to 3.8%, indicating that the employment situation is even tighter. And what this made both the stock and the bond market realize was we're not going to get 8 rate cuts, as it thought several months ago, or 6 rate cuts, or 3 rate cuts, or more recently, 2 rate cuts. We're not going to get any rate cuts. And many people, including Summers, who was a major economic advisor to the Obama administration, has said basically we should all brace for interest rates to go up further. This is completely freaking out the market and causing a major sell-off. So even with the recent sell-off, some names in the market, and the market in general, some could argue, is still overextended. If you look back year to date and then you look back a year, all the major indices are still up and up in a particular way. And if you go back to November of last year, the market's basically just gone straight up without any major sell-offs. Another major factor that I've talked about on this channel is commodities. Okay, have you looked at commodities recently? And I've done some content on this, but in case you missed it, gold, all-time high. Now, gold historically has always been an inflation hedge and an indication of rising inflation as the price of gold goes up, and it's been rallying to highs in recent days and recent months. Silver up dramatically. Copper, which is a major industrial metal, hitting all-time highs. Oil hit intermediate highs. West Texas Intermediate hit $86 a barrel today. We have gasoline going up. We have palladium going up. All the industrial metals are going up, and this is all tremendously inflationary. And then you add to it another topic that I've talked extensively about is the basic tsunami of fiscal spending that's coming out of our federal government. This enormous amount of spending, and I'll just go through the different spending programs that Biden and his henchmen in Congress have launched basically since he came into office. We have the rescue plan, which was over $1 trillion of money that was just given to people when the economy was already improving from COVID. You have the CHIPS Act, you have the Inflation Reduction Act, you have the Infrastructure Act, and you have all of these combining. It's over $5 trillion of government spending, which is coming into the system. And remember that government spending is 42% of GDP. So this is heating up the economy and heating up the employment situation at a time when the Fed is trying to combat inflation. And it's working cross purposes to what the Fed is trying to do, which is putting further pressure on inflation. Then you have one of the worst geopolitical setups that we've ever seen since World War II. And many people have spoken about this, and in particular Jamie Dimon. And take a look at this clip.
I think the most important thing when you think about the world is think about it broadly, and don't just try to guess that there's one thing that's going to happen. You know, almost no one has ever forecasted accurately, like what I call real inflection points. And so when I look at it, is again, as a risk management thing, the most important thing that's taking place is geopolitical. It's Ukraine, Israel, war, death, free nations in Europe. It's affecting everything. Obviously, a humanitarian crisis. It's affecting global trade, global alliances, very importantly, America, China. So I put that as, I would put that in the worry category.
So you have Ukraine. I mean, Russia is basically beating Ukraine. They're getting more and more powerful because of the surge in revenues that they're getting from their oil sales. The sanctions that the Biden administration has put in is doing absolutely nothing. And they are just getting stronger and stronger. Meanwhile, the funding for Ukraine in Congress is stalled, and people are arguing about that. Nothing's happening there. The Europeans are really not stepping up with anything significant. So you have this continuing problem in Ukraine. The war just keeps going on unabated, and it looks like Ukraine is losing. In addition, the Middle East. I mean, this Israeli-Hamas situation just deteriorates every day. You have the world criticizing Israel for the civilian casualties. And this, of course, is understandable. But, war is hell. And they are hell-bent, as they rightly should be, to eliminate Hamas. And even though they're doing it in a way that's kind of like, bashing it with a blunt object as opposed to surgical strikes, where they minimize civilian casualties, they're being criticized tremendously. This is slowing them down. And then they bombed the Iran embassy in Syria and killed some of the top commanders in Iran, which were providing arms to all the various factions in the Middle East that are acting as Iran's proxies. And this has caused tremendous concern that the war will escalate, and Iran has vowed to attack Israel in retribution for what they have done. So everyone's on pins and needles with that situation, and what it's causing is it's causing oil prices to skyrocket. And as oil prices skyrocket, it causes pressure on inflation, which is bad for both the stock and the bond markets. So you have all these factors converging at one time, at a time where the market has achieved significant gains over the last year. And so the question is, what should you be doing in your portfolio? What should you be looking for to guard yourself and in some cases take advantage of this situation in your portfolio? Now, anyone who watches this channel knows that I have been very bullish on energy for a long time, since I recommended going into the integrated oil companies way back during the COVID era in 2020, when Exxon was selling for $33 a share. I've been bullish all the way up. I continue to be bullish. Exxon hit an all-time high this week of $122 a share. So I was very happy to see that from a stock perspective, even though the whole situation is very inflationary. So in terms of strategy, I would still be long energy. With all the geopolitical concerns going on, you have to be long energy. You just have to. And oil and gas is the best place to be. I recommended Chevron, Occidental Petroleum, and Exxon. I'm primarily in Exxon. Exxon has outperformed Chevron over that time period, so I would continue to recommend Exxon both for capital appreciation and for the dividend. Next, I've been bullish on the tech sector, the mega tech stocks, all the way through this period going back, 2 or 3 years. And the reason for that is that I think these companies can grow their earnings in a strong economy or a weak economy. And I think that many of them are at the forefront of the AI craze, which is, a real thing. I think it's very frothy and somewhat, reminiscent of the dot-com era, but it's a real thing. It's something that will contribute to enormous productivity in the economy, and it's definitely an investable thesis. So the stocks that I would recommend for this period and really for the long term are, not in any particular order, Microsoft. Microsoft has been at the forefront of the cutting edge of the AI movement from the beginning, with this Accenture partnership with NVIDIA, which basically caused the initial advances in AI and ChatGPT. So I would say Microsoft, NVIDIA. I recommended Google pre-split at a 116 cost. It's now over 150. That was about a year ago. And I also think Apple is a buy today. It's had a significant sell-off recently, and I would still go with Apple for a long-term investment, and Exxon. So we have Exxon, Microsoft, NVIDIA, Google, and Apple. I would recommend Exxon anytime it goes below 100, which I actually did a video on that not too long ago. And I would recommend Apple as a buy right now at its current valuation. Okay, and Microsoft, NVIDIA, and Google, I would wait for significant sell-offs. NVIDIA, I'm watching very carefully, and with NVIDIA in particular, I'm looking at buying that below 700. It might not reach that level. If I do actually buy it, I will let you know. But I'm a very big long-term believer in NVIDIA. I think that all of the chip stocks, though, have a large risk if China invades Taiwan. We're all in trouble, okay? And that's a very real possibility in the next couple of years. So keep an eye on that. Unfortunately, so many of these chips are manufactured, including NVIDIA, in Taiwan. If China takes that over, that's going to be an enormous disruption. And who knows, maybe it's a buying opportunity. So we'll keep an eye on that. But that's going to be a very significant risk out there. So I do think we can expect a significant sell-off in the stock market in the near term. It's going to offer some buying opportunities, and I would certainly look to those stocks that I have recommended for entry points. And stay tuned to this channel, because I will definitely come forth either with a short video or a longer form video to let you know when I see the entry points on Microsoft and Google. Okay, the other two, Exxon buy below 100, and Apple is a buy right now. So I hope you got some value out of this analysis. If you did, please like and subscribe. And keep an eye out for both my short and long form content. A lot of times I just do the updates on the short form. I find that convenient. I hope you find it valuable. So thanks for watching. And in the meantime, check out this video with further information that you'll find extremely interesting to your investing future.